Right, okay. Good evening. Thank you very much. After a long time, we are meeting, and it's basically nice to have it after many days. Thankfully, we don't have power cuts. So I think many of us are not encountering power cuts during night times, and that's the main reason as to why I thought of doing some sessions. I'll be covering certain basic lessons also, because many newcomers who basically have started, investing and trading during the last several months, or maybe nearly a year. Many of them wanted me to do a session. At the same time, some would find it useful if this is recorded. That's why I went live stream, so that they can refer. As a result of that, I'll be just brushing through certain basics. Some people wanted how to log into the investing.com, and that is why I have this screen, the main screen in the investing.com. So you basically log into investing.com and you come to this main page. And then what we normally do is we will be typing a stock in the screen, or rather search bar, like what I have done, and we select that instrument. That counter, and then we come into the page of that counter, and thereafter we can move to the technical charts, but also you can make use of all the information that's available in the screen dedicated to that counter, and get useful and valuable information. Incidentally, it'll be useful if you register, and if you are more interested, can subscribe to it as well, and thereafter you can have an uninterrupted service provided by them. So now that we are going to talk, or share some views about the charts, we'll be clicking on to technical charts like this. Then we will get into the next page, where it's going to be the chart with a facility to enlarge it, like this. We will get the streaming chart, which can be zoom out, and we come into the page here. Thereafter, we do certain basic changes according to our own requirements, right? And as usual, what we normally do, the ones who have already started using this, we will be changing the chart style. This is a style that is given here, which is called the area chart, but we can use these icons and change the style. Here, this is the area chart. We are using the candlesticks, or we can use the bar chart or the OHLC chart. But in the case of this session, and normally we use the candlesticks chart, so we are choosing that. And then what I did was, in the window, you saw two separate windows. One is for the price line or the prices, and the other one was for the volume. I brought the volume and clicked on it and dragged it up so that it comes into the same screen as the price line. Then what I do normally is that I don't like this price line. This horizontal line is called the price line, which is the closing price. It's given real time, and that kind of disturbs me. So I normally take it out. I go to the chart properties like this and remove the price line. Then of course you can change the colors. There are normally two colors, obviously. The green is when the price is closing above the opening price, right? So we know where the open and the close values are, right up here. There are 4 types of values. You have O, H, L, C. O is for open, H is high, L is low, C is close, open, high, low, close. And this is a daily chart. So every candle represents a day. So within the day, when I drag on the cursor to whatever the candle, you will get the details of that candle over here. The open, high, low, close details of the candle is given there. Then right at the bottom, you can see the date over here. Right, when I'm dragging the cursor, you will see the date. So if I take the highest of this chart of Expo Lanka, which is 405, you can see that here, 405. That was recorded for the first time in January, on the 5th of January. Then the next day, 6th of January, also we can see it was 405. Then it has come down, gone up again here to 401.25. That's on the 18th. Then on the 24th, once again, it has gone up to 405. So you get the date at the bottom. Then also you can see the details of that candle given on the OHLC price values. That's how we read the prices, and we refer the dates by moving the cursor to those specific candles, right? So you have, as I mentioned, the green candle, where the open of this 5th of January green candle, the open has been 390 and close at 396. As such, close is higher than the open, therefore it's a green candle. And now over here, it has opened at 400 but closed at 390, which means it has closed lower. So it's a red candle. So whenever you see the green candles and the red candles, you know that it has either closed above the price or below the, closed above the open price or closed below the open price. Now, over here at the bottom, you have the volume, and this is the volume details for each and every day. You will see the values changing. Now, coming back to that 405, which was recorded on the 5th of January, you will see it's a green candle. As a result, the volume bar is also given as green. And there are two values over here. You can see green value is 2.728 million, and the black value is 2.214 million. Now, green is the volume that got traded on the day. The black volume is the average volume for the day. So normally, when the day's volume is higher than the average volume, that's a good sign, especially when the stock when the prices have closed higher than the open. But that does not necessarily mean that the prices, there are so many other things that we look at to understand whether the prices are going up or down. So that's how you interpret the candles, right? And then you have the volumes. Then, so for the time being, I will stop that explanation at that point, and let's talk about what we want to know right now at present. There again, I'll be touching the basics, because at any given moment of your career, it can be 1 year, it can be 1 month, it can be 20 years, it can be 30 years, or even 40 years. Unfortunately, in Sri Lanka, we don't have experience for 40 years because the market is only 37 years old. We started in 1985. People who had been, or who are living now, but who have experience prior to 1985, there are such people, but obviously it's few and far between. So irrespective of that experience, basics will be basics. You can't do away from basics. As a result, you have to always refer to the basics, and always should be aware of the basics. අපි හැම වෙලේම මූලික සිද්ධාන්ත තේරුම් අරගෙන ඉන්න ඕනේ. ඒ මූලික සිද්ධාන්ත give me a second. Yeah, Macha. Okay, I am doing a session. I forgot to send you the link. Shall I send the link? Okay. Okay, Macha. So මූලික සිද්ධාන්ත අපි තේරුම් අරගෙන ඉන්න ඕනේ. අවුරුද්දක්ද, මාස ගණනක්ද, අවුරුදු 5ක්ද, 10ක්ද, 20ක්ද, 30ක්ද, 40ක්ද අදාළ නැහැ. බේසික්ස් තේරුම් අරගෙන ඒක හොඳට මාස්ටර් කෙරුවොත් අපිට ගොඩාක් දුර ලේසියෙන් පහසුවෙන් යන්න පුළුවන්. අපි මේ කතා කරන්නේ ටෙක්නිකල් ඇනලිසිස් සම්බන්ධව. බේසික්ස් කිව්වම ටෙක්නිකල් ඇනලිසිස් විතරක් නෙවෙයි, අපිට ෆන්ඩමෙන්ටල් ඇනලිසිස් සම්බන්ධවත් බේසික්ස් තියෙනවා. ඒවා අපි තේරුම් අරගෙන ඉන්න ඕනේ. තොට අපිට හැම වෙලේම අමතක නොකළ යුතු දේ තමයි මූලික සිද්ධාන්ත. Basics we shouldn't be forgetting, or try to conveniently forget the basics. The moment you lose the grip of basics, you will lose your wealth, right? That has happened to some people over and over again, because they always want to forget the basics. Some people they avoid that mistake, but as humans, what we have experienced is that there are instances where basics are forgotten, right? Unfortunate, but it happens. But still, that's why you need to keep on practicing the basics, and also always keep on, or regularly, frequently visit the price action of whatever that you have invested in. That is very important. So right now, the present situation is, in terms of basics, when a trend is up or down, in an uptrend or a downtrend, right? First thing that we need to understand is whether the trend is a confirmed trend, whether it's a confirmed uptrend, or the uptrend is confirmed now, or the downtrend is confirmed now, right? That is very important. And there are ways of understanding. There are steps, just like climbing steps. Prices also climbs up, or it climbs down, right? In stages, right? The prices have gone up, prices have come down in stages, right? So when we are confirming an uptrend, the first thing that happens is now I mentioned about the OHLC, open high low close. when the prices are coming down, and then when we see the prices are falling, then the next thing that should happen is the prices have to go up. So when the prices are coming down, we have a thing called the highs. The high prices, they fall first. Right? They become lower, right? The highs become lower. Right? The highs are becoming lower, followed by the lows. Lows are also becoming lower. So you have HL, higher low, you have the LH, lower highs, and the LL, right? LH is lower highs. Then LL we know is lower lows, right? Now this lower highs, lower lows, at one point it turns, right? So basically from these lower lows, the last lower low becomes here. That is from this end to this end. In between you have, here also lower low, then it goes up. Then again, here lower low goes up, right? These are known as swing lows, right? So the final swing low is here, meaning the lower lows continue and pauses at the last lower low. And then from this lower high, you start seeing highs and higher highs, right? You have a high here. Then you have a higher high here. Right? So the lower highs become higher highs. This lower lows becomes higher lows. LL becomes HL. Right? So the first thing that happens in an uptrend is to see the lowest low, then the higher lows. The lowest low followed by a high, then becomes a higher low, not a lower low, right? Now, what happened here is that there is a LL here. This low is lower than this. So it's a lower low. But then there is a high here, right? Of course, that high is lower than this high. But after this low, this is a high. Thereafter, we wait for this lower low to be respected and turn the low into a high, like what we see here, right? Here, there was a high here, then again a low, which is similar to this low. Then again a high here, but that high is continuing to be lower highs. Even though you have a high here compared to this low, and a high here compared to this low, between these two highs, there is a drop, right? Thereafter, we wait for the lows and the highs of the candles to respect this level. If by any chance this is broken out, then the fall, the downtrend continues. That is what has happened here. So similarly, here also there is a lower low, a high. Then between these two, there's a high low, right? This is LL, this is an HL, this is a high, but there is no HH like what we see here. There is no HH. This low is lower than this. So the continuation of the downtrend extends, right? But here you have a higher low. This low is higher, relatively higher than this low. So there is a small higher low formation. But here it's a lower high formation. From this low level, which is the higher low, it goes up, but below this. So it's a trend continuation to the downside. Then we see this low is, the price breaks below this low, breaks below this low and this low. The prices come down. Then once again, in between, of course, here you have a lower low, then you have a high, but it stays only for a short period of time and comes down again, right? Thereafter, you end up with at this high, lower low, right? And this high, just like here, after this, a high is followed, but this high is lower than this high. So, you know, it's a continuation of lower highs, but here, this is the high. The next time around, you have a higher low, right? And then, unlike this period or this period or this period, the high is broken and the prices have gone up to register another high, which is called a higher high. So you have a lower low, a higher low, or rather lower low, a high, then an HL, a higher low, then a higher high, then a higher low, right? So at this moment of time, based on the price behavior, the prices have gone into an uptrend. That is the first step. Once we see this, we look at the next indicator that we use to understand whether there is a trend confirmation, right? Now, after the high low and a high high confirmation, we use the moving average tool to understand the confirmation. For that, we use short-term moving averages to long-term moving averages, right? The short-term moving average, now we are using the simple moving average because that is the slowest, right? So you, of course, you can use the other faster moving averages, but we are using the simple moving average because it's relatively slower than the others. So in this toolbox, under indicators, you have the moving average. That is the simple moving average. So I am going to use 4 simple moving averages. One is for short term, medium term, and 2 for long term. You can always use one out of those, right? So when I need 4 moving averages, I will be clicking 4 times on the moving average. 1, 2, 3, 4. Right? By default, it gives the 9-day moving average. It is actually called the 9 period because we are in the daily chart. We refer the moving average of 9 to, refer as 9-day moving average, right? So here we go to the settings or the format icon, change it to 20, and I'll be fine tuning the color. For the 20, I'll be using the same color, the blue color. Then the next one, as I mentioned, is 50. I'll be using red for that, changing the period to 50. Then I'll be using 100-day moving average. Style. Let's give something like brown. Then finally, it will be black. I'm going to bold the line a little bit. And that's the 200-day moving average. Right. When we replace these moving averages with certain periods, right, you will see the 200-day moving average gives you only a shorter line. The 100-day is also shorter compared to the other two. That is because it gives you the average figures for that particular data appearing in the screen, right? But we can minimize the chart like this and get the length increased, right? Like this. So you will see that the moving averages displayed like this. Now, the first thing that once we recognize the price action or the uptrend based on the prices, right? We look at the short-term moving average, then the medium-term moving average, then the two long-term moving averages to understand how the prices are behaving, in order to understand whether we are in an uptrend, because our challenge or our intention is to look at a trend confirmation, right? So this, as I mentioned, is the 20-day moving average, right? You can see that the 20-day moving average is broken out by the prices. In other words, the prices have crossed above the moving average, right? This is the 20-day moving average. Thereafter, we can see that this is the 200-day moving average, and this red color is the 50-day moving average, right? So you can see that the prices are testing or just trending close to the 200-day moving average, close to the 50-day moving average. In the case of the 50-day moving average, we can see the prices have gone up and thrown back or come down to retest the 50-day moving average, because the lows are just brushing the line. So in technical analysis, we consider that as the prices taking support at the 50-day moving average. At the same time, since it's close to the 200-day moving average, we also believe that the prices are testing the 200-day moving average values as well, right? And most of the time, prices, if you look at the prices anyway, right, from a downward point of view or an upward point of view, you will see most of the time the prices goes up, comes down, then goes up to the next level. Now here, if you have look at the 20-day moving average, the prices climbs up close to the 20-day moving average, right? And then comes down, then it goes up, breaks the 20-day moving average and moves higher. And presently, take the step the prices are at now is taking the price behavior, fluctuations to test those two moving averages. But as far as the short-term moving average is concerned, we know now for this particular counter that it's in an uptrend. So the short-term trend is confirmed because the 20-day moving average is broken out, right? Now we are moving into the mid to long-term moving averages. The moment you see that the long-term moving average is also broken and the prices move above that, right? The next, it's fair for us to wait for a trend breakout, or rather the moving average breakout of the 100-day moving average, right? If we break the 100-day moving average, that will be more bullish, more stronger, because all the 4 moving averages are broken. If that happens, until then, we have to respect the price behavior based on the values of the 50 and 200 moving averages and the value of the 100-day moving average. But as far as the uptrend is concerned, we have to respect in the daily chart that Expo Lanka is in an uptrend, right? But of course, if you take from this figure downwards, we are here at a lower high price compared to the prices over here, right? But that doesn't mean that this trend is a confirmation of an uptrend. That doesn't mean that this is a trend confirmation of an uptrend, right? We have to always go by the breakouts, and most importantly, the breakouts that we see in the prices and the breakouts the prices are doing against the moving averages. So when you see the 20-day moving average is broken, right? That's a confirmation of an uptrend. Therefore, thereafter, what we do is we go into shorter time frames, right? In order to use in order to use those time frames to enter or to buy or to go long, right? That also we will be using the moving averages, right? The moving average crossovers, and there are so many other trading. I mean, we are using indicators in order to design our strategy to initiate a buy position by using the uptrend, right? Once the uptrend in a daily chart is confirmed, right? We use the lower time frames for entry positions, right? Most of the time we respect this uptrend in the daily chart because it's relatively a long-term a chart compared to the shorter time frames. Of course, not longer compared to the weekly or the monthly chart, but since we are now coming out of a downtrend in the daily chart, we are using the daily chart trend confirmation, right? Thereafter, once this trend is going to extend further, then even the weekly chart will help us to add value at further confirmation into the uptrend. Until then, we will not we can, not that we can't use the weekly chart or the monthly chart, but we can stick to the daily chart and do our entries by using the rest of the short time frame charts. So this is Expo Lanka. Now let's look at probably the most active counters first. Expo Lanka, the Browns Investments, then you have LOLC, LOFC, LIOC, AAIC, that is SoftLogic Insurance. Those are by far the most frequently traded counters now. Of course, there are other counters as well, which are also, are in uptrends. So we can look at those thereafter. If you are moving on to the Browns Investments, we are only looking at the trend confirmation by using the these 4 moving averages and also the price action. Let's see, there is one question or what? So can we get recordings, please? Yeah, this is going live stream, therefore it's recorded. Okay, so let's move on to Brown's investments, right? Another point that I have to mention is that when we were in the main page in the investing.com, we use the search bar here to choose the stock or the counter. Now, when we are here in this chart, we can use this bar, search bar, to pick or choose our counter, right? So here, since I'm familiar with using the Brown's investments chart in this window, I just type the code basically relevant to this site. You can see the Brown's investments is here. Now that we have loaded the 4 time frames, you don't need to wait, or rather keep doing it, for each and every counter. Right. First things first, after this lower low, there is a high, higher low, a higher high, a higher low, another higher high. So we are in an uptrend, right? At the same time, the 20-day moving average is crossed. Prices have crossed over. One thing that I did not show you, which is important, is the volume action in the counter, right? Let's go to Expo Lanka and look at the volume behavior along with the high-low formation. You can see that the volumes have increased here relative to this area. Thereafter, there is a uptrend. Along with that uptrend, there is a volume increase, but it's not so significant compared to this area. But still, if you look at this area with this fall and search for the volume, daily volume behavior, you will see that there had been a bigger accumulation over here, right? And also you will notice that when the prices are falling, most of the time, if you see that the price, once there is a larger volume here, right? Once there's a large volume here, you have, after this high, the day where the close was lower than the open on the 29th of April, right? The volume was 6.5 million. The average volume is 2.9 million. Thereafter, that is the first time that the prices failed to close above the open price after these 2 days, right? Then we can see that, the volume also had been high, but then the prices have fallen. The next 3 days, you can see the volumes are lower, 2.7 million. Then the next day is 1.3 or almost 1.4 million. Thereafter, 1.96 million. Then the next day, the volumes have increased to 2.28 million. So when there's a fall, there is a tendency that the volumes are also coming down. The selling pressure is lower, or otherwise, for various reasons, you see, when there is a sell down and an accumulation taking place, relatively, you can research backward and see that there are the volumes are lower. But before that fall, there is a large large volume traded day, or otherwise the transactions are volume wise are larger before on the day of the fall. Here you can see the day of the fall compared to this, the volume is larger, right? Now here also the same story. It went up, the volumes are high. The next day it has come down. But the other 2 days, relatively, the volumes have been almost on the average or a little over above the average, and that resulted in the prices moving up, right? So volume behavior is also very important for us to understand. So it's very important that we train ourselves to understand the volume behavior. Then coming to Brown's investments, as I mentioned, you can see that there is a high low, higher high formation. Then the prices have crossed over the 20-day moving average and also the 50-day moving average, and testing the 200-day moving average, right? It just tested yesterday. Thereafter, you can see the volumes also have increased, right? Relatively, and also you can see that moving average volume is also increasing. So it's a very important incident to understand, and it's very useful for whoever is collecting this stock to understand how the volume is also behaving. So it's in an uptrend. Therefore, we can make use of the shorter time frames to initiate our entry positions into these counters. Before moving, I will show you maybe 1 or 2 entry strategies. Of course, a lot of people are aware of it. I mean, some of them are aware, but most of those who are, watching these presentations, not only me, many of us, unfortunately, they don't believe in these price actions and the importance of these crossing over or the crossovers of prices above the moving average and all those things. They don't want to understand and learn and increase their knowledge based on this technical analysis of price behavior, right? That is an unfortunate thing. I encourage you all to practice this, because then you yourselves will be self-sufficient, right? There are many who have become successful by increasing knowledge and using that knowledge, putting that into practice, and doing a good, good service for themselves, right? So remember to understand these things and make use of them. LOLC is also frequently traded these days, and there again, as I mentioned, you can minimize and take it forward, but at the moment, since the prices haven't gone up to that level, right, we have to stay along with this uptrend formation based on the prices. At the same time, the prices have crossed above the 20-day moving average, right? So all these 3 counters, we can see that the 20-day moving average has been broken. In Brown's investments, the 50-day moving average is also broken, and it's testing the 200-day moving average. Expo Lanka, at the moment, the 50 and the 200-day moving average are along, or rather close to each other, and the prices are testing that level, right? The important thing is to understand, once again, I have to repeat, the uptrend, right? Because if we don't believe that there is an uptrend, there is no point, trying to buy. Okay, that's why. Then we move on to LOFC. right? Here again, whether we like it or not, we can see there is a higher low, higher high formation. The volumes have increased, then broken the 20-day moving average, and right now it's going sideways, but still it's within, or rather it's above the 20-day moving average. It's in an uptrend, right? So we can initiate our positions in the short time frames. Then, as I mentioned, soft logic insurance. Again, the same story. One important thing that we can see here is that the prices have broken above the 200-day moving average as well, right? Now it's testing the 50-day moving average and trying to test and break, or rather finding it, it's finding resistance at the 100-day moving average. So you have a high-low formation, uptrend confirmation, because the prices have gone up above the 20-day moving average and the 200-day moving average as well. There's a question, let's see, why don't you recommend use other indicators to get a strong confirmation uptrend, such as RSI, MACD? We are using the RSI and MACD not to understand the process. There are plenty of strategies to understand and convince ourselves or to have a strong conviction that the trend is up, right? But the most important, that's why I was talking about the basics, the most important uptrend confirmation is a high-low formation, right? The high-low formation. Then a minimum of 20-day moving average breakout. The RSI and the MACD we use to initiate entry points or initiate entry positions. For that, that's why I said I will use some indicators and show you some strategies to initiate your entry positions. First of all, we need to understand that those stocks, whatever that we want to trade or invest, right? Those stocks have given a trend confirmation, right? So soft logic life also, there's a trend confirmation. These are very important events, breaking above the 200-day moving average is a very important crossover. So that's why we look at that. Right. Few months ago, I said that he says a few months ago, you said that you are going to start a technical analysis program from scratch for young investors. This is possible. Please educate us. Yes, certainly. I will be doing that. Mama eka karanawa. Ara mama kiwwa wage. මේ ඉලෙක්ට්‍රිසිටි ප්‍රොබ්ලම් එක ගොඩාරයක් අයට ප්‍රශ්නයක්. මට උනත් ඒක ප්‍රශ්නයක් නේ. දැන් බෑක් වුණත් අපිට අපි ඔක්කොටම එක්කව වෙලා මේ වැඩේ කරන්න බෑ. රයිට්? මොකද මේ පැය මට ලයිට් තියෙනවා නම් සමහර අයට ලයිට් නැහැ. ඉතින් මේ ප්‍රශ්නේ මේ ටිකේ නැති නිසා තමයි මම පටන් ගත්තේ මේ දේ කරන්න. ඉස්සරහට අපි කරගෙන යමු. නැවත වාරයක් අපිට අවස්ථාව හම්බුනහම මේ මගේ මොනවාද සෙෂන්ස් වලට හිටපු අය දන්නවා. සමහර වෙලාවලට මම පැය 3 8ට පටන් ගන්න 11ට ඉවර කරලා තියෙනවා. ඒ හින්දා ඒක මම කරනවා. right? Okay. හරි. එතකොට දැන් මෙතනදී soft logic life insurance uptrend confirmation එකක් තියෙන්නේ. මෙහෙම අපි බලන්නේ හේතුව ඉස්සෙල්ලා අපි තේරුම් ගන්න ඕනේ uptrend confirmation එකක් තියෙනවද නැද්ද කියලා අපිට තේරෙන විදියට. right? අපි තේරුම් ගන්න ඕනේ high low high formation එකක් තියෙනවා. in past 20-day moving average එක minimum requirement එක 20-day moving average එක cross කරලා තියෙනවා, right? ඒ කියන්නේ price නැත්නම් trend එක uptrend එකකට confirm වෙලා තියෙනවා. හරිද? uptrend එක confirm වෙලා තියෙනවා නම් අපිට පුළුවන් දැන් entry positions ගන්න lower time frames වලින්. ඒක හින්දා තමයි අපි බලන්නේ මේ daily chart එකේ ඒ trend confirmation, uptrend confirmation එක තියෙනවද කියලා. LIOC එකෙත් අපිට පේනවා uptrend confirmation එකක් තියෙනවා. ඒ වගේම තව ඒ අනිත් පහටම සාපේක්ෂව we can see that the LIOC price action is more stronger, right? Much more stronger compared to the other 5. Already we went through 5 counters. This is the 6th counter, and LIOC is in a very strong uptrend, right? The reason as to why I'm saying it's a strong uptrend is because, first of all, the prices have crossed above the 20-day moving average. Secondly, it has crossed the 200-day moving average. Thirdly, it has crossed above the 50-day moving average. And also it has crossed above the 100-day moving average, right? The volumes obviously have increased, right? Therefore, LIOC is in a very strong uptrend. Okay, so LIOC is a counter that whoever is believing in this counter, whoever is confident in this counter, that they should be, taking positions on the stock according to the proper entry points and your own accumulation strategies, right? So these are the 6 counters that I said I will be going through. So all 6 counters are in uptrends, right? Let's see. Let's take LIOC and go back to all the other 5 counters also, and see by using shorter time frames what we can do, right? So in the case of LIOC, what I'm going to do, I'll be moving. When we are saying shorter time frames, you can use any of the shorter time frames according to your wish. It can be 1 hour, it can be 2 hours, 4 hours. Even though I don't use the 4 hours because our market is only for 2 hours, but that doesn't mean that you can't use the 4 hours. I haven't seen people using 5 hours, but some I have seen using the 4-hour chart. But when you're using the shorter time frames, one discipline that you should cultivate is to stick to your own shorter time frame periods, shorter periods, right? You can't just change them, right? Let's say you are at 2 hours and then you don't want the 2 hours, then you go to the 1 hour chart, sometimes the 5-minute chart, like that, right? There again, you can put it this way also. Say the daily chart, you know that there's a trend confirmation, right? We just now saw that. Then you can go to the 1 hour chart. In the 1 hour chart also, let's say there is a uptrend confirmation, right? Obviously, because the daily chart is in an uptrend, so we are looking at the 1 hour uptrend as well. But then there is a reversal on the 1 hour chart. When the reversal is there in the 1 hour chart, you can use another shorter time frame to understand at which point there is a reversal once again to the upside, right? So you can use it that way, but you have to have a discipline, right, to follow whatever the shorter time frames that you want to follow, and you must do it consistently. Now, I'm using the 1 hour chart. When I'm using in order to make use of the entry positions, or rather make use of the charts to make my entry positions, what I do is I'll be using the momentum indicators and some of the other indicators as well. Famously, we use on the body of this chart itself, I'm using the parabolic stop and reverse. Okay. Then this is the 1 hour chart. Then I'll be using MACD separately. Then the RSI, right? You can use so many other indicators. Then I'll be organizing them. You know, you can change the colors, color combination, and all those things over here. Now, here what happens is, you know, the challenge that we have is that, of course, just like in the daily chart, the prices in the hourly chart also has gone up. Now we are here, right? So our idea is to buy, but in this case, right, there's a reversal, right? And then, of course, even the RSI has gone up to 85 points, and now it has come down. This is, mind you, this is the hourly chart. It is coming down, right? So this is not an ideal time to initiate a buy position based on the hourly chart. At some point of time, there is going to be a reversal, right? Now, this is one strategy I'm talking about. Let's say this is the strategy number 1, right? In this strategy, I'm going to use, no, before using, I'll be using the 5-minute chart. But before using the 5-minute chart, we need to understand that the 1 hour chart has a bigger return on investment, percentage-wise movement, than the 5-minute chart, right? Now, when I make a entry position on the 5-minute chart, immediately we need to understand whether we are going to go by the return on investment on percentage-wise or rupee-wise. In my case, the most successful I have seen is to go with percentage-wise, not rupee-wise, right? So there is at the moment, we can see that there is a reversal here. Therefore, let's look at the 5-minute chart to see what's happening to the counter. Okay. Here I'll be talking to you about some important things in the MACD and the RSI also, right? First of all, we need to wait, especially the MACD, right, for the blue line, which is the MACD line, to cross above the signal line. Ideally, right, if we are patient enough to see this blue line crossing above the center line, that's very good, right? But of course, that does not necessarily mean that we cannot initiate a buy on the signal line crossover, meaning the MACD line crossing above the signal line. We can initiate a position there also, right? But it will be, or otherwise, you know, you can initiate a percentage at that level and increase the entry, or rather the volume when you see that the blue line crossing above the center line. Center line is the horizontal in between these histogram bars. You have, you know, at a certain the horizontal lines are above a midpoint here and below the midpoint here. So that's called the center line, right? So here you can see that the MACD line is below the center line and also relatively below the signal red line, right? And you can see that it's a it's ranging or moving, just almost brushing that that signal line, right? So at this point, you can't do anything as far as trading is concerned, right? There has to be a clear signal. So when this clear signal is happening, right, you will see that the RSI also moving above the 50 point, the halfway mark of the RSI. Right? You need to wait for that. Right? There has to be the, you know, the blue line has to cross above the signal line, ideally above the center line. This must increase above the 50 point mark. Thereafter, you have to see, now that I'm using the 20, 50, 100 and 200 period moving averages, it shows in the case of the 5-minute chart, the 25 minutes, 20 periods of 5 minutes, or rather, 5-minute charts, rather, what shall I say? 20 periods, meaning for every candle you have you have 5 minutes. So 5 minutes into 20 only, 20 bars only we are using here. So this 50 is also for 5 minutes, 100 is also for 5 minutes, 200 is also 5 minutes, right? So you need to understand that. Now it's a shorter time frame. As a result of that, we can see that any crossover, meaning the 20-day, 25 minutes moving average crossing above the 55 minutes moving average gives you a strong signal over here, right? When the prices are crossing above these two lines, there's a strong move, right? At the moment. So basically you have to focus on the 20-day, 20 period moving average and the 50 period moving average. The prices have to cross above the 20 period moving average and the 50 period moving average. Thereafter, you will see the 20 period moving average crossing above the 50 period moving average. At that point, you will see the PSAR dots also below the prices. At the moment, it's above the price. So when you're using the PSIR, you must understand that when the dots are above the prices, they are considered as resistance levels, right? So this is the latest resistance, which is something like 61.22 on the 5-minute chart, right? So basically it has to break above that, right? So there is a lot of thinking going behind the entry position, right? Then also once there's a crossover, the price is crossing over, then the 20-day moving average crossing above the 50-day need to happen. Then also watch for the volume increases. When the volumes are increasing, you can see that what I mentioned about the MACD line crossing above this signal line plus the center line all happens, right? And also you can see that the RSI moving above the 50-day 50 point mark, right? So when you see all these things are happening, it's a very strong entry position by which will help you to rather the 5-minute chart will help you to initiate that buy position, right? So basically you go for the 1-day chart, understand that it's in an uptrend, then you go to the 1-hour chart, then you see that there is a reversal from the upside, so it's in a downtrend. As a result, you are not taking any positions there. You come to the 5-minute chart, then you wait for the those reversals to happen, right? The MACD, RSI, then the 20 period moving average crossing above, then the PSAR dots, being tested as resistance, and the price breaks out above that. The moment there's a breakout here, the dots come below, right? So when the dots are below, then you see the 20-day moving average crossing above. Then there is another theory, or rather a rule to a strategy, where some people wait for this, they look at the high at this point, when the prices are crossing, then when the PSAR dot is appearing below the price, then there's the 20-day moving average crossing above. Then you look at the high at that point, and you wait for the volume behavior, right? And you analyze the high point there, and you collect at that high point. But people who are confident, who are using stop loss, they will be making use of these areas also to buy and accumulate at that point, right? So that's one main strategy that you can use by using the uptrend confirmation, right? That is in the case of LIOC. Should we consider the slope of a moving average also? Whether it is turned upside or just closing the candle above is enough for confirmation? No. Once you see that the confirmation is happening now, I mentioned that it is the daily chart. It's in the, you have to see the confirmation, the uptrend confirmation. You don't wait just because it goes above. You won't consider that as an uptrend. That's why we go for the the first step that we do is to look at the high low high high formation, right? While that high low high high formation takes place, you will see at least the 20-day moving average is broken. While doing that, you will see the volumes increasing. At that point, we were not using the MACD or the RSI. But if you want to use, there are no hard and fast rules. You will see that even the MACD line has crossed above the signal line. The RSI has crossed above the 50-point mark, right? All these are helpful to determine the trend confirmation, right? Most importantly, the moving averages. The moment you see that, there's a crossover, then there's a throwback. So you need to always understand that also, right? So many times when the price crosses over the moving average, it throws back. Then it goes up, breaking the previous high, right? Now here also, if you are not using any of these things, you can wait for this high to be broken, because when the prices are going up, that means the highs have to be broken, otherwise it won't go up, no, right? From here, this was the high, it was broken, went up. Then this was the high, broke, went up. This was the high, then it broke, went up, right? Now it went up to this level. So if it is going to go up to these areas, then this value has to be broken. So sometimes, there are instances where we wait. We can use the buy stop limit order to initiate a buy. Now this is at 66.80. We can put at 66.90 or as the stop, and 67 or 67.10 as the limit, and initiate a breakout buy position, right? That is by just using the one-day chart. Even by using the one-day chart itself, we can trade, right? The reason why we use the hourly the shorter time frames is when we are involved in the market. Maybe it's 2 hours or till 2:30 or 12:30. If we are physically present in the market, then we can use. If we are, actually professionals who work in the throughout the day, then it is very, very useful for that type of people to use the daily chart. You know, every day in the evening, we can look at the chart and understand what we should be doing, because at that point it is a little bit risky even to use a one hour chart or you know, shorter time frame charts to place our buy orders to be executed on the next day, right? So that is not realistic. But there are no hard and fast rules. If we want to look at the hourly chart or shorter time frame charts, and if we feel confident that these are the levels that we should be placing our buy orders, we can do that, right? So that's for LIOC. Similarly, we can make use of the same thing, same strategy, same idea to any stock. We have 200 plus 290 odd stocks. We know frequently traded counters. They are not only these 6 highly traded counters, but there are others like the plantations are also heavily traded now, right? And then maybe some other export counters, right, like Haley's, are also heavily traded. But relatively speaking, these are the most heavily traded counters. That's why I'm covering these. So that's basically what I want to show you. Just to take you all through another counter. Take Expo Lanka and look at the shorter time frames. Right, in the case of the shorter time frame, again you can see that it's going through a sideway movement. That sideway movement, we can see that the PSIR is above. MACD line has gone above the center line, which is bullish, but the MACD line has crossed below the signal line, the red line. Then the RSI also has tested this high at 68.7, and now it's coming down. At the moment, it's 57. So then if you take yeah, right. So let's go to the 5-minute chart. Right, in the case of the 5-minute chart, you can see that the RSI has come down to 42, below the 50-point mark. Okay. Then the MACD line is almost at the center line, but below the signal line. Then we can see the prices are below the 200-day moving average, 50-day moving average, and also the 20-day moving average, right? Now there is, we are in a very challenging period because the 20-day moving average has crossed, but the prices have come down. As a result of that, we need to wait for the prices to go up and even cover, cross above the 20-day moving average. And also we must wait for the PSAR to be tested, and the dots, the PSR values have to come down below the prices. So you got to wait there. When all these things are happening, you will see the volumes are also increasing. Then only you will have an opportunity to trade. Now these are trading strategies, right? So for the other counters of the same story. LIOC 5-minute chart I saw as it has formed a descending triangle with drying volume 2. Can we consider it has another point to take a short trade in pre-sell. Yeah, of course you can take a short trade, and you're referring to a triangle. So those are basically different strategies, right? You can see a triangle. Yes, obviously you can see a triangle here. Let's touch on that. First of all, you have to look at the highs. Okay. Then ideal triangle will be from this to this, right? Of course, you can make use of this, and then that support line is broken. The question is, let's say this breakout is helping us to take a short. These are 5-minute candles. So the 5 minutes, we need to understand the return on investment, ROI, right? Now take this area. This is the top now. You take from this top to this level, right? Visually, it's a huge fall visually, but we are talking of a 9.49% drop, right? So as we know, when we are projecting a breakout, then you're talking of a breakout there, right? So that project this distance over here amounts to a 10.47% return. Then it has to come down to 53.80, right? So your target price will be 53.80. 53.80 is this. So it has to break this support and come down to this level. So this is the distance that you have to play around with. This is one of those mistakes people are making, not knowing how much and where to sell and what type of a profit that you need to take. So since these are 5-minute charts, right? For 2 hours, you have roughly how much? For 60 minutes, you have 5, 6, 12 candles, right? For 60 minutes, you have 12 candles. Then you have 24 candles, right? So within that 24 candles, you're talking of 1 day, right? Are you, I mean, you need to be confident that within those 24 candles, you will be able to see a 10% loss, drop, meaning, if you're going to short it, right? So those are the risk factors that you have to consider when you're wanting to short this level. And then also you can have different types of targets to buy, right? In our market, we have to short our own stock. No? If I have LOLC only, I can sell, right? So you need to understand that. So you've got to be confident that at this point, this is going to happen, right? Because the reason why I'm saying that is because some people don't believe that these projections are working. That's why I'm saying. So if you're confident that this projection is going to work, then give me a second. Yes, Hakim, thank you. Right? So you have, I mean, if you really believe that this is going to happen, then you can short your own stock, right? But then you need to understand the risk factor also, right? So that is that regarding the patterns, right? So that's a different story. We were talking about Expo Lanka on the 5-minute chart. So this is a challenging scenario. So you need to look at that. Marky said he's using the 1-minute chart. There again, I'm sure you're aware when you use the 1 minute chart, right? Unfortunately, this is how the investing.com shows you the what do you call the candles. I don't know whether you're using any other kind of a platform where you get the comprehensive or rather open, high, low, close properly. In this case, what I have seen is that the Heiken Ashi candle gives you the perfect candle, right? In the Heiken Ashi candle, you have all this, right? The open, high, low, close based on the Heiken Ashi calculations, you can see, but not in the other one. At the same time, when you're using the Heiken Ashi candle in the 1 minute chart, also you can see that the values of course, because of the 1 minute chart, the values are different. The values of the MA moving averages are different. At the same time, the values are calculated based on their, the Heiken Ashi calculations. As you know, the closing and the open positions are based on their formula, right? So in that case, here you have a buy signal, MACD signal is there, PSAR dots are below, but the other calculations must happen. In the case of the 1 minute chart, you don't see the volumes here properly, right? Not like the 5 minute chart. So, 1 minute chart is also a challenging chart, right? If you have really mastered it, it's a great thing. Otherwise, you need to practice it a lot. Many technical analysts say in a confirmed uptrend by moving average, descending triangle also will lead to bullish breakouts. Personally, are you also in the same position? Descending triangles will only lead to bearish breakouts. Thing is this, in my case, any pattern by using the support and the resistance line, right? The triangles are like that, no? So you have a support line and a resistance line. In an uptrend, what happens is the resistance line has to be broken. Okay, the chances of the resistance line being broken in an uptrend is higher than the support line being broken. You understand? So that's why I was talking about the LIOC. We have to be confident. You can see a triangle, but it's in an uptrend. But in this case, that triangle support line was broken. If you go back to that LIOC, you will see I was using these 2 points. So this support line is broken, right? On closing basis, it has broken. So I was using from here, no? So this distance, we got to be confident that this distance will carry, meaning it will come down to that level. That's why we are using using many other types of analysis like the Fibonacci's and all that. Even if you don't have the Fibonacci's, you have this 100-day moving average as a support. Will it come down to that level, or will it try to find support in between the bottom of this body and the top of this body, or more or less like a gap here, right? So those are the challenges that we have. As a result of that, when we are shorting, we have to have our minimum ROI and the maximum ROI. Otherwise, you have to have a clear, a clear target. Then only you will be confident. Then you can even place orders at those levels, and then you don't have to worry too much. If they are hit at those levels, and you're up on the deal, right? So you have the two in a triangle. You have 2 lines, support and the resistance. So just in an uptrend, obviously there are chances of the resistance being broken. If the prices are inside the 2 support and resistance lines. If there's a breakout, then there are chances that, I mean, breakout of the support like the LIOC, sometimes there is a chance that it could come down and test that projected area sometimes, right? So you got to have a margin of safety, or you have to give that space to understand that, right? Right. Volume weighted average price itself is, you're talking about the volume, right? In that formula, you have the volume as a weight into the average price. So you basically add the volume to that period in addition to the price. I mean, in a moving average, simple moving average, if it is 20 period moving average, you take the entire values of the 20 day or 20 periods, then divide by 20. Here you take the values also, I mean volumes also, you know. So it's an advanced way of looking at it. So calculation wise, the idea is that, you know, so in that sense, some people consider that to be more accurate than a simple moving average, because you are taking the volume also, no? Right? So that's why basically they take the value, say price into the volume, then take that value into number of periods and divide it, you know. So that's what. So that's basically what I wanted to talk or share with you all today. Understand the uptrend, then come to the lower time frames and initiate your entry positions based on your strategies, right? As some of you all mentioned, you all are aware of so many technical terms, technical words, there are ideas behind. So use all of them. This is primarily to just, you know, take you all through the you know, to drive a point, because you know, when the prices were high, we forgot, you know. Here we are talking about the uptrend confirmation. What about this? There was a lower trend, downtrend confirmation also. If we are considering a breakout of out of 20 day moving average, or rather prices breaking above the 20-day moving average is an uptrend, how about this, right? So people didn't believe these things, you know. People didn't want to believe, they just didn't want to believe, you see. So that's why I said, you know, basics are basics. That's why I wanted to talk. Now that we have come to an uptrend scenario, a positive scenario, right? Remember, this is also happening, you know. In technical analysis only, you all need to understand that you can train yourselves both ways, right? You understand both sides, the uptrend and the downtrend. Fundamental analysis won't tell you, sentiments will not tell you, right? Only technical analysis will tell you that. That is why technical analysis is important, because it covers both ways, right? If you master the downtrend confirmations also, right? Just like our friend was talking about this shorting your own stock, right? If you're trained that way, you can do it. Now there are, you know, cryptocurrency traders in the Sri Lankan market now, forex traders in the market now, so they know very well both sides, right? So they are prepared, they know, I mean, they are all trained, their minds are trained, they are not scared, right? So you know, I mean, even in cryptos or forex markets, when you go real, right, you know, in order to learn, it's very difficult, you see, because when you're going real, you're not using demo accounts or virtual platforms, isn't it? So you know, so in technical analysis or only, you will understand both up and down trends. So it is training your brains to do that. It's not easy. That's why I always say making money in the stock market is not easy, but not hard, right? Many ASPI derived counters already broken out from the falling wedges, resistance and forming bullish patterns, but ASPI didn't. Individual counters will see that's why, can you remember I showed you only 6 counters. Some of these counters are not relevant to the ASPI. You understand? So they are not in the SL20 much, right? So you have, I'm talking about 6 counters. Then you have the other main counters. What are they? Mostly, Haley's is there. Then the rest are like the plantations or some of the other counters which can survive in this challenging period. That's why we have only a small fraction of the entire market being traded today. So that obviously gives you the idea that, this is not relevant only to Sri Lanka. You would, if I think some of you would have read articles regarding the US markets. Some people used to laugh at them also, because only a handful of the entire market were heavily traded, right? The rest of the market was lagging. So just imagine, you have how much? Close upon 10,000 stocks or more than 10,000 counters listed in that market. Now we have only about 293 or 295 counters listed. Right here also we have only a fraction of the market being traded. There are also only a fraction of the market being traded. So that's the human reaction in this challenging period in the entire world. That's why ASPI is there again. I saw the ASPI also is above the 20-day moving average and trying to test that. I don't know whether it's the 1 hour chart. I'm sorry, not the 1 hour chart. Here, if you leave these out, it has broken. Right now, you are here due to these tails. The calculations on the PSA are all wonky, but otherwise you have a short-term uptrend in place right now. This type of thing has happened. You just go behind and see how this 20-day moving average has worked. Right here, it has always supported. Here, the other way around, it had resisted. So when the support is happening, just like here, who knows? There can be a curve up here. If the breakouts are happening, we don't know. Otherwise, it can come down and take support here. But we know that there can be strong supports above 8,200. And another thing that we have to be mindful of is that we are moving into the June-July period. Not every year that June-July period had been a good period for the ASI or the market, but there are many years where the June-July period running up to August had been good, right? So we never know, right? So we are moving into the June-July period now, and in that scenario, we have broken this. So just if you go to the previous June-July, right here, June-July, broken, gone up, right? Here it has broken, retested, then only gone up. This is 2021. This is during, this is during 2020, June, July. (2019) June, July. (2018) June, July. Of course, it was the other way around, right? Here from April it has gone up, and then that's in 2017. So you go back and see the significance of this June, July period. After, if in that period there is a trend, there is a crossover above the 20-day moving average. Right? That is the number one condition. The moment it goes up above the 20-day moving average, what has happened during, since we are going into the June, July period, doesn't mean that it is always going to be the same. It won't happen like that. We have to be realistic, but we have now come to an area where the 20-day moving average has been broken. It's retesting it, finding consolidation here, and we have to respect the short-term uptrend even in the ASI, despite all the challenges, because only a fraction of the entire market is heavily traded. Rest of it having many challenges, right? You're talking of, we don't know how much kind of taxes that are going to happen, what will happen, the pressures for the banking sector, hotels, all that stuff is there. But then the prices have gone up. The market has gone up in the short term. Let's see whether we have any questions in the chat group or other FB. Okay, ප්‍රධානතම බලන්න පුළුවන් දේවල් මම කියුවා. මම හිතනවා මේ ප්‍රධානතම දේවල් ඕගොල්ලන්ට ප්‍රයෝජනවත් වෙයි කියලා. These are very simple things. That's why they are called basics, but they can make you a lot of money. So remember, and if you all want to kind of, once again refer, it's there, and most probably I'll be loading it in the YouTube also for reference. Hopefully I will meet you all again next Saturday if things are okay, if we are going to have the continuation of power without interruptions, right? So till then, have a very successful week, and we are moving into the first week of June as well. So all the very best. God bless everyone.
Thanks, Arya. Thank you.
Welcome.
Thank you, Salia.
Welcome.
Thank you, Salia.
Welcome.
Thank you, Salia. Thank you. Thank you.
Thank you, Salia.
Sure.
Thank you, Salia.
Have a nice weekend.
You too.
Okay, good night.
Good night.
Thank you very much for the session.
Welcome.
Thank you.